This is Tour M, Trade, Farm Policy, and Production Economics. This session is Farm Policy, Federal Program Payments to Tennessee Crop Producers. I am Aaron Smith, Associate Professor and Extension Economist with the Department of Agricultural and Resource Economics at the University of Tennessee Institute of Agriculture. Today, the session is going to focus on some of the federal support payments that row crop producers have obtained over the last 2 years and the continued support as we look out to 2020, 2021. So just to start out, I want to kind of break down some of the payments that producers have been receiving in terms of support from the federal government into two different components. The first one is Farm Bill programs. Those are programs that are authorized typically every 5 years that provide the basis of what we typically refer to as the farm safety net. Those programs include crop insurance and then Title I commodity programs. And the latest versions of Title I commodity programs is agricultural risk coverage and price loss coverage. The second form of payments that producers have ended up getting over the last 2 years, I lump into one group called ad hoc payments. And we'll kind of step through what some of these payments are, how they're calculated, and what the benefit was for Tennessee producers. The first program is the Market Facilitation Program, sometimes called MFP. Those are the trade mitigating payments due to some of the disruptions we've seen as some of the new trade agreements have been negotiated over the last couple of years. And then the second one, which is very new, is the Coronavirus Food Assistance Program, or CFAP. There are a couple of different versions of that program. The one that we're going to be focusing on for row crop producers is the direct payments and what the implications are of those. Those payments have started going out, but they have not been completed yet, and they are for the 2019 crop. So when we do the estimations, we will be looking at what Tennessee producers have received so far in 2018, or for the 2018 crop and the 2019 crop, and then look at some implications for 2020 and beyond. So the first one, just to kind of step through the Farm Bill programs, is crop insurance. Most people are very familiar with this program. It's authorized under Title 11 of the Farm Bill. And what it does is it provides numerous products, buy-up coverage options, different selections that producers can choose from to help mitigate their production, financial, and marketing risk. So when we looked at doing this analysis, we took all counties in Tennessee and all products. So that included revenue protection with the harvest price exclusion, yield protection, the area programs, and then also SCO and stacks, which are kind of add-on policies, stack specific to cotton. Then we looked at all coverage levels and all unit structures. We basically took all the insurance products that are authorized through the federal government that are administered by RMA, provided through approved insurance providers, and aggregated up what the data ended up saying. So when we look at 2018, what this graph ends up, or what this chart ends up showing, is the number of acres insured by our 4 primary row crops, the liability, so what the insured value is, and then the producer share of the premium and the government share of the crop insurance premium, and then indemnities, or how much was paid out for each one of those commodities. Again, we're looking at this over all the different products, so there's a substantial amount of variation that is in here in terms of the actual insurance product. You can see, the vast majority of our acreage in Tennessee is insured in some capacity through the federal crop insurance program. Roughly 2.6 million acres. Just for example, when we look at soybeans at 1.4, typically we're planting somewhere around that 1.4 to 1.7, 1.8 million acres of soybeans. So again, we've got a substantial amount of the crop that is insured through this program. Liabilities just aggregated just under $900 million. So again, a very substantial risk management tool, and one that is widely used by producers. There are 2 components to the premiums that are paid. There's the producer share, and then there's the government share. And you can see, breaking down, for example, cotton, in 2018, producers paid $2.5 million in premiums, and the government cost share was $8.3 million, and under that that year we only seen about $1 million that was paid out in indemnities. Now this varies tremendously year over year. So when we end up looking at 2019, again, you'll see a similar amount of acreage that's insured. We see a similar liability. Again, we see that cost share between the producer premium and the government portion of the premium. But again, what you'll see is you'll see some of these indemnities a little bit higher. And a lot of that stems back to, if you remember in 2019, we did have some prevented planting issues, both for wheat and then also for our spring planted crops that did end up indicating some payments. So again, prevented planting indemnities are included in this calculation. But what I really want to focus in on is just this government share of the premium. This is the amount that the government is providing to support this valuable risk management program. Switch up to the next Farm Bill program. This is agriculture risk coverage. I'm focusing just on county. There is an individual option, but again, we don't see very much utilization of that in Tennessee. And then price loss coverage. And so again, just I'm not going to get into the program details, but just kind of some broad overview of these programs. These are direct payments to producers. They're authorized under Title I of the Farm Bill, and the payments are determined by the program that is selected. In the 2014 Farm Bill, you had to pick between ARC and PLC for a 5-year term. In the 2018 Farm Bill, which affects the 2019 crop, they did modify that so that you pick for the first 2 years, and then after that it'll be annual after the 2021 crop. One big thing, and this is one that sometimes people struggle with, the ARC and PLC payments are paid on a farm's base acres. So it's completely decoupled from planted acreage, which does make it somewhat unique in how it's implemented, particularly in Tennessee, where we have some discrepancies between what our base acreage is and what our planted acreage is on an annual basis. The other thing that's important to understand on this program is that the way that payments are triggered are through a combination of yields and prices. The national marketing year average price, so it's not specific to a farm or to the state, it is the national marketing year price for both of these programs. And then when you have ARC County, it's based on your county yields. Again, it's not dependent on what's going on your individual farm. For PLC, it is dependent on each individual farm and what that PLC payment yield is to determine what that actual payment is going to end up being. So it is really important to evaluate where some of these payment yields are. Typically, they get locked in for the life of the Farm Bill. We do get some opportunities to increase PLC payments under the 2018 sign-up interval. There was a provision in there to increase it, but once the sign-up interval has completed, typically those are locked in and they don't change year to year in terms of what the payment yields are. So I mentioned base acres is a big issue, and it's kind of a bit of a misleading or misunderstood concept, I guess. They are fixed to each FSA farm, and so they are originally a rough representation of what was planted, but due to some of the time periods where you could end up adjusting your base acres as a new Farm Bill was implemented, it kind of got skewed towards having some higher base acreage levels relative to what our current plantings are. And the prime example of that is with seed cotton. In the state right now, we have 613,000 seed cotton base acres, but we're only planting about 410,000 acres of cotton in the state. So you see right off the top, there's about a 213,000 or 203,000 acreage gap between base acres and planted acres. Corn is pretty close, but again, that fluctuates year to year because base acres aren't going to move after they've been set by the Farm Bill. So the 2019 base acres will be applicable for the remaining 4 years of the 2018 Farm Bill. Where we see the massive discrepancy is in our soybean acres. And again, when we look at what we've got for base acres, not quite 800,000, but we're planting close to 1.4 million acres in 2019. Now that's down a little bit again, just because of the 2019 prevented planting issues that we ended up having. But again, this is something where when we look at this is very different than some other regions of the country where there's a more closely affiliated relationship with what's being planted versus what the base acres are. Wheat, again, we got a little bit more base relative to where our planted acreage is. So there's a couple of really quick points that we need to make on this is one, you know, it does end up kind of skewing some of the numbers when we look at, you know, payments directed to a specific commodity. So obviously when we're talking about cotton, we'll get into some of these numbers. There's a substantial more amount of payments going out relative to what the actual production is. And so that's somewhat misleading in some of the numbers. The opposite is true with soybeans. The other thing that's really important to point out is one of the reasons why we see this is historically when we look at past farm bills and the current farm bill, certain bases tend to pay more than others. And so obviously seed cotton was one that is a very highly prized base. So trying to maintain seed cotton, corn, and wheat at the expense of soybeans is typically going to deliver higher average payments than if you end up reallocating towards a soybean base. So again, that's something that's factored in. Something that was a little bit new in the 2018 Farm Bill. This was part of the process to end up getting seed cotton back into Title I, because in 2014 it wasn't in there in the Title I commodity programs, is this unassigned base. So we have a substantial amount of base. This used to be old cotton base, about 142,000 acres that used to be in cotton base before it was reincorporated by the bipartisan budget act back in 2018. So when we look at ARC and PLC payments in Tennessee for 2018 and projected for 2019, we always have to remember that these payments are based on national marketing year average prices. The marketing year for corn and soybeans doesn't complete until August 31st. So the payments for the 2019 crop won't actually be received by producers until October of 2020. So again, these are still projected. There's still some uncertainty in what those prices are going to end up being. But as you can see, we do see some small payments for corn, very small back in 2018. Seed cotton, we've seen higher payments. One of the reasons why we see this increase for all commodities is, again, what we've seen is with the new sign up for the 2019 crop year, that'll be the first crop year that's under the 2018 Farm Bill. So again, you see a substantial difference. You know, prices haven't improved much between 18 and 19. It actually went down. So again, what we've seen is we've seen some higher payments, but it's a combination of that price effect plus signing up for different programs. So when we look at the first ad hoc program, it is the market facilitation program. These are the payments that were made to producers to partially mitigate losses due to trade disputes, and primarily with China, but there were other trade disputes that were factored in, particularly in the 2018 year. It is implemented through the Commodity Credit Corporation. It's important to point out there was two versions of this. So the first one affects the 2018 crop, and those payments were made on a commodity by commodity basis. And then in 2019, the payments were made per planted acre and varied by county. And so they lumped all the commodities together and just had a county payment rate for the amount of acreage that was planted. So we look at 2018 MFP payments in Tennessee. Again, the payment rate was set by the commodity. So it was 6 cents per pound for cotton, 1 cent per bushel for corn, $1.65 for soybeans, and 14 cents for wheat. You can see the Tennessee production estimates, and that gives us our total payment amount. Again, these are estimates. There are going to be some restrictions as to what these actual production levels were. And then you can see this is average per harvested acre. And so again, this one's harvested, not planted. It's a little bit different, but since these payments are based on production, harvested is a little bit more applicable in terms of the acreage rather than planted. So you can see, obviously, cotton and soybeans benefited substantially more than something like corn or even to a lesser extent wheat. When you look at the 2019 market facilitation program, this is where it changed, and essentially what it does is it aggregated up all the planted acres in a county and made it so that there was one rate and then just multiplied by each individual farm's planted acreage for all of these commodities. I highlighted the ones that are more applicable to Tennessee, so corn to soybeans, upland cotton, wheat. So the highest payment rate per county was in Hardman County at $126 per planted acre. But you can see that a lot of our more traditional or historic cotton counties did receive slightly higher payments than other areas of the state. And there was a huge variation. So if you look at, Johnson County at $16 per planted acre versus Hardman at $126, that's a $110 difference. Obviously substantially different commodities being produced in those, but there was a tremendous amount of regional variation. Second ad hoc payments that ended up coming out, and this recently came out under the CARES Act, the Coronavirus Aid, Relief, and Economic Security Act, was the CFAP payments. There's two components to the CFAP program. The first one was the Farms to Family Food Box program, which didn't really have an impact on our four main row crops, but the CFAP one did have payments that were designed for corn, cotton, soybeans, and wheat. And so essentially what they ended up basing the payments on was the unpriced inventory as at January 15, 2020, not to exceed the 50% of the 2019 production. So they're paying based on 2019's crop. There is nothing in the current CFAP program that would make payments on the 2020 crop. They may do something later. We can get into that at the end of this presentation, but as of right now, the payments that are out there are based on 2019 production and inventory that's held on hand as of January 15th. So the payment rates were 33.5 cents per bushel for corn, 9.5 cents per pound for cotton, 47.5 bushels for soybeans, and winter wheat was not eligible under this program. At the time when they were looking at the specified intervals where there was price declines, it was determined that wheat actually didn't have a 5% loss. Since then, I think you make a strong argument that it definitely has, but as of right now, it is not eligible for a payment. Some of the math that goes into these can be a little bit confusing, but essentially the way that the program works is you will take your January 15th inventory. You can't exceed 50%. There's some payment limit restrictions, but if it was unpriced, you could end up getting 33.5 cents per bushel. So we look at CFAP payments. These are estimated payments. Again, it is important to realize that we didn't end up adjusting for any entity payment limits or caps due to production or anything that was ended up being priced. These are estimates. So again, there is some uncertainty in these numbers. We'll have to see what the final numbers are later this summer, probably more realistically into the fall. But as of right now, what we're estimating is payments to corn about 29 million, payments to cotton about 17, and soybeans 12. And since obviously wheat is not eligible, there wouldn't be any payments for those that had wheat in storage. So when we look at 2018 federal government support by commodity, you can see the breakdown on the programs. Obviously, we have our crop insurance premiums. That is just the government portion of the premium, ranging between 15.45 million for corn, 25 million for soybeans. Obviously, much higher acreage. So again, we will look at the per acre components, but these are just gross numbers for crop insurance, ARC and PLC, and then MFP, obviously with that high MFP payment rate for the 2018 program, soybeans that did end up receiving a substantial amount. And then in 2018, there was no CFAP payment, so there is no amount there. When we look at 2019, you will see these payments increase dramatically because we do have, again, the crop insurance component, the ARC PLC component by commodity, and then again, we had another round of those MFP payments. And then on top of that, we'll have the CFAP payments on the unpriced inventory as of January 15th. And so we're looking at some of these gross levels. What we're looking at is total payments or support to Tennessee corn, cotton, soybean, and wheat producers in 2018 was $154.78 million estimated. When we look at 2019, that bloomed dramatically up to 453.97 million. Now, obviously, this is these programs are designed to partially offset some of the losses that producers experience due to multiple things. You know, primarily that is the trade disruptions, and then also the massive impact of the COVID-19 pandemic on commodity markets. So, you know, this has went up, but there's some valid reasons why we've seen additional support that have come out to our producers. But when we look at this, it's 2.9 times greater when you look at 2018 versus 2019. Now, it's a little difficult when you look at those gross numbers. You know, when you're aggregating them up, it's kind of tough to wrap your head around, you know, what is $160 million of support. So we broke this down on a per acre basis. And what you can see is, you know, corn just over $22 per acre in 2019 is what the crop insurance, ARC PLC, MFP payments were. And you can see the balance of that, or most of that, the vast majority was in crop insurance. When we look at cotton, again, you have the crop insurance component of $23 an acre, ARC and PLC payments of $47.50, and then MFP of $30.80. Now, you do have to be very cautious with that ARC and PLC dollar amount, because it can be very misleading. It goes back to that base acre component, where if we have substantially more base acres, you're going to get a larger gross payment to cotton, but that doesn't necessarily mean that cotton was planted. And so again, this is one where it has to be interpreted with some caution as to the level of support that cotton is really achieving, because this is combining payments on all seed cotton base acres and then divided it by the planted acreage. So again, this one has to be very cautiously interpreted. Similarly, the support for soybeans would be the opposite, right? Low base acres obviously decreases the amount of payments. Now, again, you're really amplifying that when you're dividing it by the planted acreage. But again, you're looking at, in general, about $22 per acre for corn in 2018, $100 per acre for cotton, and then, you know, right around $55 or so per acre for soybeans, and then wheat, again, you know, just over $20 per acre. When you look at 2019, this is where you really see some of these payments come up substantially. And obviously it's because we have our traditional or our farm bill programs, and then we have our ad hoc components. But because the MFP payment was based on per planted acres, again, this is skewed somewhat because we are taking into account some of the differences across counties. But you can see support for corn just under 150, cotton right around 300. But again, a lot of that is being skewed from this massive potential seed cotton payment. And so that'll bring that down when you actually look at what was actually planted on some of those base acres. When you look at soybeans, about $100 per acre, and wheat not quite $150 per acre. So when we look at payments per planted acre or support, because we obviously are looking at the crop insurance premium is embedded in that. In 2018, the average across all acres was $48.98. The farm bill component of that was $25. The ad hoc component was about $24. And so when we're thinking about this, you know, part of this is, well, what do we need to do in terms of future farm policy if we're doing this type of level of support for the farm bill component, but then we're doing almost an equal amount, or if we look at 2019, double the amount in ad hoc payments on average per planted acre in Tennessee. So again, 2019, about $148 per acre when you factor in all four of those programs. Farm bill, about 48 of it, and then the ad hoc or the CFAP and MFP payments about $100 per acre on average when we look at Tennessee row crops for the 2019 crop. Just a couple of quick study limitations and caveats, because it is challenging when you're dealing with some of this data to make sure that we end up having a good understanding of some of the limitations. Obviously, we're talking about some payments being based on base acres, some are on insured acres, some are on production, and some are just county based on planted. So again, it is challenging to end up making sure that we're comparing apples to apples across there. The other thing that we do need to point out is the 2018 crop year was under the 2014 Farm Bill. The 2019 payments were under the 2018 Farm Bill. So we did get a shift in policy over this time period as well. There's a huge amount of variation in payments between counties and farms. And so again, you know, when we say that there was an average of $148 per acre, per planted acre in 2019, you know, you're going to have some counties that will have very little, and you'll have some counties that have substantially more. And that goes for farms as well. A lot of it depends on what those PLC payment rates were for each individual farm. Payments are received at different times, right? And so when we look at 2019, for example, you know, the crop insurance the subsidies end up coinciding with the planted acreage or the insured acreage. But when you look at ARC and PLC, those payments are paid almost a year after the crop is harvested. You know, when we look at the CFAP payments, it's based on crop that's in storage. So again, there's several different variations in there that does need to be considered when you're looking at this data. The reason why we do it per planted acre is just to try to standardize it across commodities. It just makes it maybe a little bit easier to understand how some of these payments, or the amount of some of these payments. The other one that we didn't factor into, I mentioned this, was the CFAP. We didn't add in those entity payment limits or the caps on production. So again, it could end up having a reduction in the support through that program. And then again, that acreage planted versus the base acres really does amplify the support for cotton producers and kind of skews the numbers. And again, it's just based on how those numbers are estimated. So we look at implications for 2020 and beyond. Producers would be very much worse off financially without the payments received for the 2018 and 19 crop years. Again, there was so much that has occurred that was outside of producers' control. You know, if you go back to 2019, we had the wet planting conditions in several of our western counties. We've had the continuing trade war that's went on since 2018, 2019. Then we've had coronavirus. So again, you know, massive amount of negatives that have influenced our row crop producers, and these payments have helped mitigate some of that effect. I will say though that it does seem unlikely that we will continue to see support levels at the 2019 level. That was a substantial increase year over year. But that's not to say that there won't be any more support forthcoming. There's a reasonably blank slate when it comes to ad hoc payments that will affect the 2020 crop year. And so there are some questions. Will there be a CFAP 2.0 that will affect 2020 production, or maybe even an MFP 3.0? We'll have to see how the pandemic proceeds, and also what ends up occurring with some of the trade negotiations with China. And so there's a huge amount of uncertainty. I always tell producers, I mean, you shouldn't plan on having some of these payments, but if we do get some additional support because markets have been disrupted, I think you know, you have to make sure that you're taking advantage of these programs to make sure that you're getting payments that you are eligible for. So just making sure that you're still informed, or staying informed, I think is a very wise strategy. There will be substantial ARC and particularly PLC payments for 2020 given our current price environment. Now, obviously, when you're talking 2020, the marketing year for corn and soybeans doesn't even start until September 1, so huge amount of uncertainty. But if prices stay at the current level, it'll be very, we'll see some substantial payments under PLC and ARC as well. One other thing that, you know, is going to be very important in terms of a policy standpoint is the U.S. election. It adds a tremendous amount of uncertainty. You know, I'm not going to speculate on what either administration potentially would end up doing, but it does end up adding a degree of uncertainty. And, you know, a lot of what we might see in additional programs or ad hoc programs is going to be dependent on who's at the helm and who ends up winning the 2020 election. With that, thank you. I appreciate you viewing this. And again, if you have any questions or would like to discuss anything, you can reach out to me through my email address. Thank you.